You've probably heard this before, right? Register your company in the British Virgin Islands and save tons on taxes. It's sold as a tax haven paradise where your business enjoys total privacy and confidentiality. But what if that dream is actually a trap? What if for most entrepreneurs today, a BVI company will do more harm than good? Hi, I'm Per from Statrys, and in this video, I'm going to give you 4 reasons why you should think twice before registering a company in the BVI. Stick around, because this could save you thousands of dollars and months of headaches for your business. Reason number 1, this is the biggest problem. Opening a business account for a BVI company is very, very difficult. And without a business account, you don't have a business. You can't accept payments, you can't pay your team, you can't operate. Your company is stuck. At Statrys, we hear this story every week. I started a BVI company, but no one will give me a business account. What should I do? Here's the hard truth. Major banks don't trust the BVI companies. Thanks to the BVI's reputation for secrecy and its association with financial scandals, compliance departments at these banks are very cautious. Many will subject BVI applications to intense scrutiny, while others simply say no from the start. Opening business accounts for BVI companies just isn't worth the hassle for these banks. Your formation agent might say, "Don't worry, we have banking partners." But these are usually small, expensive banks with terrible service. Even if you find a decent bank willing to work with you, prepare for a long, painful process. We are talking weeks or even months of intrusive questions, endless documents requests, and a very real chance of rejection at the last minute. Some providers will even charge you thousands for account opening assistance with zero guarantee of success. And even if you jump through those hoops and get an account, your problems aren't over. Payments to or from a BVI company often get flagged for additional screening. Imagine telling a client, "Sorry, your payments is frozen for 2 weeks while the bank investigates." This isn't rare. This happens to BVI companies every day. Reason number 2, the increasing pressure of new regulations. The idea of the BVI as a hands-off place to open a company is no longer true. Under pressure from global bodies like the OECD and the EU, the BVI has been forced to roll out a wave of new laws that create serious compliance burden and penalties. First, transparency requirements. Companies now must file their register of director and detailed information on ultimate beneficial owners with the BVI register. While this information isn't public, it's accessible to law enforcement and tax authorities. The days of anonymous companies are over. The BVI also requires most companies to file an annual financial return. If you don't comply, you face large fines, and your company can lose certificate of good standing, making it impossible to open a business account. Second, economic substance regulations. If your company engages in certain relevant activities like holding intellectual property, finance and leasing, or being a holding company, you must prove real economic presence in the BVI. This means having an actual office, local employees, and holding board meeting there. Here a simple analogy. It's like renting an apartment in a city you don't actually live in, but calling it your home. The BVI now say if your company wants to call the island home, it must actually conduct real business there, with real employee and real management decisions. Every year, companies must take a substance test to determine if these requirements apply. Companies that fail to meet requirements or don't report properly face huge fines and sanctions, often running into tens of thousands of dollars. For most location-independent entrepreneurs, consultants, or e-commerce sellers, meeting these requirements is impractical and defeats the purpose of choosing the offshore jurisdiction for cost and flexibility. But even if you could navigate the business account challenges and new regulation, there's a third, quieter problem that can hurt your business: reputation. In business, perception matters, and the perception of the BVI can damage your company's credibility. Put yourself in the shoe of a potential client. You're about to close a big deal, and you tell them your company is registered in the British Virgin Islands. For many people, the first thing that comes to their mind are the Panama Papers and the global financial scandals. it makes them question if your business is legitimate. To make matters worse, BVI companies can include ending like Ltd, Inc, SA, or GmbH in their business name. Terms typically used to identify companies from specific countries. This often leads to confusion among banks and business partners who may initially assume the company is based elsewhere. When they later realize it's actually registered in the BVI, it tends to raise even more doubts. This isn't just about perception, it has real consequences. Clients in the US and Europe might have policies that stop them from working with the companies from high-risk jurisdictions. Trying to raise money, venture capitalists and serious investors want structure that they see as stable and transparent. For many investors, the BVI doesn't meet those criteria. Even your ability to use payments processors like Stripe or PayPal is at risk. These platforms face huge pressure to fight fraud, and a BVI company can be a red flag for their compliance team, potentially leading to a sudden account suspension that cuts off your revenue. To be fair, BVI entities are still used in some area of high finances, like investment funds or complex assets holding structure. But for the average operating business, consultants, online store owners, and import-export business, having a BVI company means constantly fighting against people's suspicions. The fourth and final reason is cost. The truth is, a BVI company is often far more expensive to run than you might think. While the initial setup fee might seem reasonable, but the real costs add up when you need to maintain the company. You'll face annual renewal fees, and as we've discussed, preparing and filing the new annual return and dealing with economic substance reporting will likely require professional help, adding even more to your yearly bill. This might not matter for larger companies with complex structures, but for most small business owners and entrepreneurs watching this video, it's a huge factor. And let's not forget the challenges of getting a business account. Add it all up, you could easily spend $2,000 for setup, another $3,000 for a chance at opening a business account, and then face over $2,500 in an annual fees. All of that for a company that will struggle with opening a business account, face increasing regulations, and be treated with suspicion. So what should you do instead? You should know that there are better options out there. Modern reputable hubs like Singapore or Hong Kong offer stable banking, clear legal system, and genuine credibility that BVI simply can't match. You'll find it much easier to open business accounts, and your clients are less likely to face payment delays or complications when dealing with these well-respected jurisdictions. At Statrys, we offer a full suite of services, from company setup in Singapore or Hong Kong to opening a business account and ongoing compliance support. Remember, choosing where to incorporate your business is one of the biggest decisions you make. Getting it wrong can cost you a fortune and stop you before you even get started. If you're ready to explore better alternatives, visit Statrys.com to learn more about Singapore and Hong Kong company formation options. Have questions about which jurisdiction suits your business best? Contact us via live chat, WhatsApp, or email at support@statrys.com. We'll guide you to the best option for your situation. Thanks for watching.